Investors and traders, welcome to the channel. Market chart pattern. Today is 30th of November 2024. Hope everyone is having a great weekend and a fantastic Thanksgiving. Apologies for delay in the videos. It is because of my travel. My travel will be concluding pretty soon, so I'm hoping from next week we begin to get back to the normal timetable as I return to my normal time zone in the United Kingdom. So do apologize for the lack of the videos, and I'll try to make up for it hopefully next week. As always, this video is for educational purposes only. It is not a financial advice. So we'll start by taking a look at the US dollar on the weekly chart. So here we go. So the US dollar has been pretty strong ever since it hit our target in this gray box here quite a while ago now, back in the 7th of September, excuse me, October. And here we were expecting a rally, and the initial target was about 38.2% retracement, which is around 103.30 at that time. And of course the market just kept on going higher, and then what we were looking at was for this ABCD pattern right here, with the possibility maybe it could hit 109 as well. Now one thing which is really key to remember is that the 107 level was a really important high. But what the market did is week of 18th of November, it actually went above it. But there was just no follow through. So this ABCD was pretty strong. So we'll just keep on watching. It looks like what the market has done is basically it's a range bound market. It's a pretty wide range, just going on for quite a while. It tested the bottom of the range, now it's testing top of the range, and there's just no follow through. So the chances are that the weakness in the US dollar is likely to continue. And if we just draw just our retracement, so it could come down a little bit further around 105 level, which is going to be 38.2% retracement, and below that we have these moving averages which could provide some support and will also be in the middle of the range. So this is what we are looking at in terms of the US dollar. If we just move down to the daily chart, what we can see is, here we go, look at this pretty strong move up, and now it is just consolidating around here, but it does look that this chart wants to move lower. So on the daily chart we have some structural support coming around the 104.60 level. So it looks like this is the level the market might want to test for a possible support. And if we move to the Euro USD, which is almost the mirror image, but not quite exactly, it's about 51% of the 51% of dollar index is actually Euro USD. What we can see is the market has actually made this ABCD, and in fact what it has done is an extended form of the ABCD. So here we can go and take a look like this. Here we go. So 1.272, in fact it went a little bit lower than this, and it's quite the mirror image of it, because what the dollar index did was it clipped the high and it just clipped the low. And in terms of the retracement, what we are looking at is basically, here we go, so that's gonna be the high, and let's draw the 61.8% retracement. So it went to about 50%. There we go. So we had a confluence of two things coming around here, also the structure. So the Euro USD is very, very interesting here. What we are now watching for is the market symmetry. Here we go. And if we just copy the same and we bring it here, we can see these market symmetry is already broken. So there is a pretty good chance that we might have seen a pretty good low in the Euro USD, or a top, in other words, in the US dollar. Of course, from here it can pull back. That pullback actually might provide some sort of a lower risk opportunity on the buy side, as long as this low is held. If it's broken, then I think we have got a further way to go down to around 1020. So that's gonna be the level to watch. Now this is the Euro USD, and if we move down to the British pound here, here we go. So in the British pound, Here this pattern formation was a very strong one because we had a number of these ABCDs completing. The black one is actually a CD leg is an extension of the AB leg, and then we have the red one completing, which is a proper ABCD right at the 1.272 expansion of this. So we had a confluence in a number of these ratios coming together, and what we have seen is actually a move which is which took the British pound much lower. So we had identified these zones as possible support. We did see a little bit of support come around our key level, then it went to the next one, and in fact even lower. So this is how weak this market has actually been, and what it has done now is it has hit a pretty strong an important support level around the 125.40, because that is the 78.6% retracement of this entire move low to the high, so this entire CD leg. So that's pretty important to watch. And if we these are the little bounces that we have seen in this market, and just market is pretty much around there. So what we are looking at is basically this market to get more bullish, it needs to get above the 38.2% retracement, which is going to be around the 1.285. So that is going to be the level. Here we go. If it begins to close above that, I think then the British pound has got a pretty good chance to actually at least test towards the top of the range. This is what we are looking at in the British pound. And if we move down to the Japanese yen, here we go. So as you guys remember, we have not been looking at this pair as often as we were at one point, but you can see that our pattern formation right here, this is where we had the bottom come in, and then we were watching for a rally to the 38.2% retracement minimum, and we got that, and then just kept on going higher. And what it is doing now is it's finding pretty strong resistance between the 61.8% 78.6% retracement. So by the looks of it, the way it closed on the daily chart last Friday, I think there is further downside which is to be expected. And if we just take a retracement level, here we go. And yeah, you can see that close below the 38.2% retracement. This just tells me I think it's gonna go for 147, 146.50, because that is where we have some structural support, and 61.8% retracement come in. So this is what we are watching in the Japanese yen. Now let's move over to the debt markets, and we take a look at the shorter end of the curve. This is our US Treasury 2-year note in yield terms, and we can see that here we had marked this level of 4.35 roughly as the yield, and we have seen the market actually not able to trade above that, and the yields have been actually moving lower. So it does look like it is a pretty important resistance level, and I would expect the market or the yields to actually move a little bit lower to around 4 level, or roughly 4% on the 2-year Treasury note. And then if we take a look at the TNX, which is the 10-year Treasury note, you guys will remember that this is what we were watching here. We had the perfect market symmetry come in. We had the 61.8% retracement of this low, this high to this low, 78.6% retracement come in, and this is where we were calling in a top in the yields on the 10-year. And this is what we have seen, a basically remarkable, well, I shouldn't say remarkable, but a pretty strong move lower in the yields, and this is per our expectation. And it's pretty much right at the 38.2% retracement, so we might get a bounce or something here in the early part of next week. That is kind of what we are expecting to happen. And now if we just move over and take a look at this in terms of the futures chart, because this is something that we like to watch, we can see that here, look, it's just been moving really nicely from the 61.8% retracement right here. And what I am expecting is basically, let's see, it's very close to 38.2% retracement. Here we go, Here we go. I know it's got a while to go. So 111.15 is the region that I will be watching for. Here we go. So it's got a little bit further room to go. Now the interesting thing is, if we just zoom out a little bit and look at this, look, we can draw a trend line. Of course, there have been overshoots, but this is also something called a throwover, and the throwover in a treasury market, as big a market as it is really, really important. So there is a chance that we could actually see this thing retrace even much higher, and test 112.18, which is where we have this structure resistance come in. So I'm of the view that the yields are likely to move lower, and this is the beginning of that what we are looking at. And if we just take a look at this on the weekly chart, here we can see that, okay, we have a low, we have another low, which is higher than this low, and then we have another low which is higher than this low. So what we have going on is basically higher lows, and if we take a look at this, is a higher high compared to this. So it might be beginning of a trend in a a market which has been a very bearish market for a number of years now. So you can see that a nice looking trend line right here. So only getting below this trend line is now going to make me bearish on the treasuries, especially on the 10-year note. It had a perfect ABCD. We nailed it on the daily chart. The subscribers will remember that. And then we were watching for further bounces to come, but they never really materialized. There's been a pretty long stretched retracement. But if we were to just take a look at this, the market symmetry concept is there. It works even one more time. I just want to show you that how important this concept is of market symmetry. So what we have seen is basically a move lower of equal magnitude, and we saw the market begins to move higher. So that's great. As long as this remains intact, I am bullish, meaning the yields are likely to move lower. And then if we take a look at the long bond futures, this is the 30-year bond futures. Slightly different pattern formation, but what is important is that the treasury market, which is 10-year treasury note, is much bigger than the bond markets, and we are also getting into a situation which is going to be a throwover. It's going to be a really powerful formation, and again, that will have the same definition of higher lows and higher highs, and maybe eventually we could get our pattern completed with a possible target of around 131.26 to 133.05 in this market. And now let's move over to the gold market. Here we go. So here, this is the box we are drawn on the weekly chart. The box, this is what the market is doing. We have had a pretty strong move lower and found support from the 20-week moving average. It's back into the range, but the gold has been a really bullish market. But if we just take a look at this on this really long-term chart that we have been looking at, you will remember that we had these really big long-term ABCDs completing, and because the momentum has been pretty strong, we were looking for 2750 roughly to be achieved. It not only achieved that, it exceeded that. So maybe the momentum can carry it to 3000, 3200, but I don't really see much more upside in gold beyond that at this moment in time, and these are really long-term patterns. So the month of November is completed, and what we have seen is, you can see that in a long time since October of 2023, this is going to be the first monthly close which is going to be on the negative side. So make a note of it. What we could expect is perhaps basically a trading range to ensue, and then we could even expect the market to move a little bit lower as well. So whether it's the start of a bear market, I don't know. But what could happen is the market could actually pull back right into 2350 level, which is gonna be, this market has had pullbacks like this previously as well, so it's gonna be pretty normal. But it looks like in the shorter terms, maybe perhaps even on the daily chart, the gold market does look more on the bearish side than on the bullish side. And what we have seen is basically the market pulled back about 10%, roughly 9.27, and it has had a fantastic rally, and it went right to the 61.8% retracement. Wasn't able to get above it. Really nasty looking candle, and what we are looking at now is some sort of a retracement. So yeah, there is a chance that what we might actually be doing is an ABCD pattern like this. Here we go. Which could actually see the prices pull back quite a bit to even around 2450. That is going to be a possibility. So we'll just keep on watching this market. The gold, just because of these really big patterns which complete on these really long-term charts. Because of this, I think we are in some sort of a correction in gold, and the chances are the correction is not likely to be completed before it hits around 2450 level. So 2450 to 2400 is where I'm expecting this market to actually complete its corrective patterns, if indeed it is in a corrective pattern, which I think it is. Now let's take a look at the silver market. Okay, do apologize, the internet here is a little bit sometimes it doesn't work properly, so not really able to get much information here. Okay, let's take a look at SPX. Okay, so I do apologize. I think something has gone wrong with my internet. What I will do is basically stop right here with the gold analysis, and I will try to come back later on where I do another video for the stock indices. So with that, I'll leave you. Thank you very much for watching the video. Good luck, good trading, and we'll speak soon, and I'll try to do more videos as I get back to my home country. Have a fantastic weekend, guys, and speak to you guys soon.